Welcome to the 30-minute hour. It's the personal development podcast for the seven-figure entrepreneur who's looking to level up and become unstoppable. I'm your host, Eric Twiggs, your procrastination prevention partner. Joining me as always, you know him as the super CEO, the business strategist extraordinaire, and all-around good guy, Ted Fells.
Happy Monday.
It is indeed a happy Monday.
June 3rd.
Can't believe it's June already. Time is flying. Time is flying.
Good to be here, though. Good to be here.
Absolutely. So, I mean, the fact that time is flying, that makes our topic today even more important, right? Because, you know, there's this myth that we think we have time. You think, oh, I've got plenty of time. You know, there's certain people, they set their New Year's resolutions. Oh, yeah, I'm going to do this. I want to conquer the world. Here we are. It's June. Year's halfway over. And I'll bet you, Ted, somebody set some goals around money, right? This is the episode to lean into, right?
This is the one.
This is the one. The year's halfway over. You set your money goals, and for some, yes, you've hit your goals. You're on pace to hit the goal, but for others, not so much. We've got some subject matter experts, because everything starts with a mentality. Anything you want to do, it starts. You have to have the mindset for it first. So today we're going to talk about how to shift to a wealth building mindset. That's what we're going to talk about today, and we've got some subject matter experts to help us with this conversation. But please understand, this is not your everyday podcast. No. Adam and Emily, we do things a little differently here on the 30-minute hour. We're a little different. But fortunately, our guests and anybody can go back and catch any of our episodes on Apple Podcasts, Spotify. You can watch the video recordings on Facebook and LinkedIn and YouTube and all those other great places. So let's get to this. How to shift to a wealth building mindset. Our guests, they're dynamic real estate investors, and they've undergone remarkable shifts in mindsets themselves and investment strategies throughout their journey into entrepreneurship. They're engineers by trade, and they transitioned from corporate roles to real estate investing in 2013, initially focusing on single-family properties. They later shifted to large multifamily syndications in 2017 and have syndicated over $250 million in assets since then.
What did you say?
They've syndicated over $250 million in assets.
Yeah, you all are some bodies. Wow. That's great.
You know, I'm just gonna go ahead and introduce them from there, right? Because everybody's like, what?
What?
All right. So please join me in welcoming to the 30-minute hour Adam Roberts and Emily Cortright.
The crowd goes wild. Thank you.
The crowd goes wild.
Thank you. We're honored to be on.
Yes, it's truly an honor to have you on. I definitely want to hear the backstory as far as how you got to this point. So please share, like, how did your journey into this world of wealth building begin?
Thank you so much for having us on, Eric. Again, my name is Emily Cortright. This is my husband, Adam Roberts. And we were both engineers, like you said, working at General Electric, climbing the corporate ladder, moving around the country. We were living in Southern California. And one night, Adam invites me to an investing class. And I show up, and I think it's about normal investments. You know, what do I put my 401k in and things like that. And I show up, and I find out it's a real estate investing class. And I go up to him, and I'm like, what are we doing here? We're not going to invest in real estate. And he's like, no, just come in, just listen. He had been lucky enough to have read Rich Dad, Poor Dad before that. And so he had already had some wheels turning. I had a lot of doubts, but I stayed, I listened, and that 2-hour class literally changed our lives because it showed us how real estate can provide financial growth and security for the future. And I saw numbers that made me think like I could flip 2 houses in a year and I could make more than my salary that I'm making at GE all year. And so the wheels started turning, and it just so happened that within about 6 months of that class, GE sold off the facilities that we were in. And we went through a major life change. It was, we were part of the asset sale. So it was one of those like knife in the heart moments. Like I was crying, this isn't supposed to happen. But looking back, it was probably the best thing that ever happened to us because it was the kick in the butt that we needed to allow me to have the confidence to say, you know what, the big man doesn't care about us. We need to take our wealth into our own hands. And we moved from California to Texas. I quit my corporate job at 28 years old and said, you know what, I'm going to start our real estate investing business. And we've been in Dallas-Fort Worth for over 11 years and have it's been an amazing adventure with lots of different shifts and mindset growth throughout the way.
So you mentioned that kick in the pants. So now what happened? So they sold off what exactly happened? Were you out of a job or?
Yeah. So our facility, we worked at 2 separate facilities in the same division, and they basically put the whole division up for sale. My facility sold to another aerospace manufacturing company. So I still had a job. But it was with a new company. Emily's facility eventually sold to a investment fund, and the shop closed shortly thereafter. So had she stayed, she would have been on the kicked to the curb looking for a job.
Yeah.
So yeah.
It's interesting. Like I don't believe in coincidences, right? It's obviously it was for you to make the move, right? And sometimes it takes it takes that type of a situation to get to where you really need to be.
Yeah, it really does. It takes the analysis paralysis out of it, right? Because at that point you have no choice. You have to do something, right? And there's always easy roads and more difficult roads, but you got to do something. And yeah, to your point, it really does. It makes you pivot in a direction that is meaningful.
Okay. So like, do you find that was it a massive shift that was needed as far as your wealth mindset, or did you come into it like, okay, yeah, this makes total sense? Like talk about the shift that was required to get you to where you needed to be.
Well, I think one of the first shifts that we had to make was looking at each other and saying, what do we want to do? What asset class do we want to invest in? We decided single family real estate was the best thing for us. So I started with education, and I started reading books on flipping houses, reading books on rental properties, and learning. I got my real estate license so that I could facilitate our own listings and sales. And that mindset shift, it evolved to how do we build up the best business for us instead of building up somebody else's business? And one of the first habits that we really had to start back then was looking at our financials and tracking every month what our income was, what our expenses were. We were living on one paycheck and saying, how much can we invest? Because we wanted to invest the most amount of money as possible to build this snowball that was going to continue growing. And so one of the tasks that we implemented really early on was monthly financial tracking to say, how much money can we put into this business and can we invest to really make it happen?
Awesome. Okay. All right. So now you're the founders of A&E Investments. So talk about like who is your ideal client and how specifically do you help them?
Today our ideal client is usually a family that wants to benefit in a win-win transaction with us. And I say win-win because Emily and I are extremely active on the investment front. We've, you talked about our multifamily holdings. We've also diversified into mortgage note investing. And we also do a lot of industrial triple net lease investments. So utilizing that platform, our clients can invest alongside us and take advantage of whatever we're getting involved in, right? We started that really in the multifamily space, where we were buying, Eric, to your point, properties were humongous, right? That Emily and I couldn't buy on our own. We would have to syndicate those deals using investor funds. And we learned over time that, if we did well, in other words, if we went through the due diligence and had a successful investment project, our investors did well, and they wanted to continue doing well, and they wanted to continue working with us. So our ideal client basically says, hey, for this portion of our portfolio, we're going to trust you, Adam and Emily, and just invest in whatever you're doing, whatever you're investing in.
Okay. All right. That's an interesting model and setup there. What are just from all the people you work with, like what are the common stumbling blocks that you see that keep people from embracing this wealth mindset?
One is one that I just mentioned, not knowing their financials and saying they might think to themselves, I don't have any funds to invest. But if they actually wrote out their financials, they might realize that they've got, say, 100,000 in the stock market that isn't performing so well. They might have 50,000 in an investment account that is not performing as well as they think. And so there is, I think, an opportunity to see where your funds are not being utilized when you actually write them down on paper. And then second thing I think is the education piece. And there's a lot of ways to learn about different investment types. And that knowledge can go as deep or as shallow as you want. Some of our investors say they listen to some of the basic educational material and they say, you know what, we trust you. Here's our funds. Some of our investors want to go deeper and they want a deeper education. And so we can guide them to different avenues to provide any level of education that they like on the asset class we're investing in.
Okay. And do you find that this kind of the educational system, it can be a stumbling block because you're kind of conditioned to go that traditional route, right? When you think of making money, you think about graduating from school, doing well in your classes, going out and getting a good, steady, secure job. Like, what role do you think that plays in people kind of having this mental block as far as other ways to make money?
I think that is really deep societal piece, right? I think everybody kind of thinks like, oh, well, I have to do these certain things in life that I've just always been expected to do. And by all means, I think there's a place for the formal education, system. But it's like Robert Kiyosaki says, right? What was that quote?
Formal education gets you a job. Specialized education makes you a fortune. Mm. And so at the last conference we were at, where Robert Kiyosaki spoke, he really harped on that. And we've lived that through a few rounds of specialized education, somewhere in the neighborhood of, say 30 to 50,000 to learn an entire asset class like multifamily syndications. But compared to our college educations, the specialized education has made us millions of dollars, whereas the college education got us a salary.
See, I think even right there, that's a stumbling block for people. You said you spent $30,000 to $50,000 just in education.
Yep. Just to learn one specific investment vehicle.
But one thing that is important to point out is that we've invested the money to learn those asset classes so that our investors can have confidence that when they're investing with us, we understand that asset class. And so our passive investors don't necessarily go through the same education that we do. They leverage the education that we already did.
Okay. Yeah, I mean, I definitely, I think when you like people who pay attention is the saying there, and definitely investing. And I think understanding that if you want to get to the next level, it does require an investment of time, and it also it requires money.
So can you kind of go through an example, right? If
Yeah.
someone is interested in investing and they want to work with your organization, what does that look like? I'm about to borrow a lot of money from Eric, and I want to see what I'm gonna. He doesn't know yet, but yeah,
Right.
I'd like to know how that goes.
Yeah. Well, it generally starts with the relationship, right? We don't do a whole lot of business with folks until we've established, some type of relationship, and it doesn't have to be years long, right? It generally helps for us to understand, surface level details about someone's financial situation, what they're used to investing in. Hey, what does the portfolio look like today, and what have I been used to investing in? Is it, paper assets, stocks, bonds, mutual funds? Is there some alternative investments involved? Because at that point, it can literally be just, to Emily's point, very shallow very quick education where it's like, hey, did you know that you could invest in a mortgage note? Did you know you could buy somebody's mortgage? And then someone says, well, I didn't know that. Tell me more about it. And then you can kind of, for lack of a better, you could really create a plan for that individual or that family and say, well, here's what you're typically used to getting on investment returns based on your portfolio. And then here's what Adam and Emily have been able to achieve over the past, 7, 8, 9, 10 years through some different types of investment vehicles. And then if it's something that the person's interested in exploring further, they usually make an investment alongside us, right? Whether it be in a multifamily apartment community or in a mortgage note or in an industrial, storage complex, that kind of thing. We're always looking for investors to join us in our investments. That's how we do our deals. And so it starts with a relationship, but then we usually build out a plan based on that individual. Like, hey, what type of returns are you looking for? What are you used to? And what can we help you with as far as our activity goes?
And to give some numbers around it, we have investment opportunities as short as 13 months. And our longest one that we have offered has been 15 years. So it spans the gamut of short-term to long-term. And we work with people with self-directed retirement accounts as well as cash investors. And the returns range anywhere from, say, 6.5%, 7% up to 10%.
Okay. Well, that's good stuff. So what else? What are some other steps that our followers can take to embrace this wealth building mindset that you teach?
I think one thing that I've always appreciated is attending some, let's say it's real estate. If real estate is something that a audience member wants to get into, attending events, meeting people, building the network, it really where the rubber meets the road. It doesn't necessarily have to be paying for, a huge education and being the lead investor in everything. I know people that simply get out and participate in these, networking events or business masterminds. There are so many of them here in Dallas, Fort Worth, for example. There's probably 10, 15 different multifamily apartment business groups that get together, on a monthly or a quarterly basis. Just getting involved can be a huge step in somebody's progress and learning, right? So I always advocate for folks to just get out of the house and get involved with some of these networks.
And I think one basic step towards somebody's wealth building journey is to really, once you have your balance sheet written out, you know where your money is, focus on where you have dead money. And dead money is money that is sitting there making 0.01% interest. I looked at one of my statements. I made 15 cents of interest all year. And focusing just on that is a easy, practical way to have a little win in your wealth building journey and get that dead money making at least 4.5% to 5%. And you can do that with high yield savings today. You can do that with treasury bills, and you could do it with income funds. There are a lot of different ways to get that dead money working for you. And I think that's really a good step for beginners to take, to say, you know what, I just made a change that is going to bring me in maybe $1,000, $2,000, $3,000 this year of free money that I wouldn't have had if I wouldn't have just made this one little change.
Okay, no, I like that. It's a good strategy. So get the dead money working for you. Shoot to get at least a 4.5 to 5% return. I think that's great advice. So what about success stories? Do you have a memorable client success story where you've changed their life because now they participated in your program?
Yeah, we've had a couple of multifamily deals go full cycle where, I mean, we receive a lot of positive feedback based on projects. One in particular was a community in Dallas, Texas. Here we live in Fort Worth, Texas, so Dallas is about a 30-minute drive, and it was a 208 unit apartment community, and we essentially through pretty, I would say, typical business plan at an apartment community, we returned over a double your money in less than 3 years on that investment. And so, when people see that type of return, they usually want to see what else we're up to, right? What else are we getting into that we can kind of keep those returns going? So that specific apartment community, the success there was really the team that we hired to put at the property. A 200 unit apartment community is going to have, 5 or 6 people working at the community. And so it was all about the folks on the team that made it happen. A lot of good talent in the leasing office, and they really believed in the property. But really it was a 2.3 times original principal on a 3-year investment. So just a huge home run for us.
And one specific investor testimonial, I have a colleague from my Keller Williams office that invested with us through a retirement account. And that project, when it sold, it increased their retirement account by more than double. This was the best retirement investment that they had ever made in their entire corporate careers. And every time I see them, hug my neck because they say, "Look what you did for our retirement account. Like it's flourishing because of you." And so those are the kind of warm and fuzzy things that we love to hear about.
Like, how does that make you feel when someone says that to you?
Very, very accomplished. And we have a big responsibility when we manage millions of other people's hard-earned money that they have spent years and years saving up to invest. And so it's humbling, but it also reminds us how big of a responsibility it is.
Yeah, no, that's awesome. What a great story. And I know you get asked a lot of questions about this topic. So I am curious though, like what's one question that you never get asked that you do wish that people would ask you?
When it comes to investing and wealth building, I think the one thing that people need to be asking and paying more attention to is, well, how noisy is the investment? And really, only recently have Emily and I ourselves been really paying attention to this, because you can have a great investment, but it can be very busy, right? It can be very stressful. It can be sleepless nights, right? It can be maybe a high risk, high reward type investment. And so lately, as in the last several years, Emily and I have been really saying, okay, well, that's a great looking investment, but how noisy is it? In other words, how stressful, how busy is it a lot of effort involved? There's a lot of folks that want to get into the multifamily apartment investing space as an active investor. In other words, the person going out, finding the deal, getting it under contract, putting across the earnest money, raising the equity from investors. And I always say, yeah, it's great. It's a great wealth building tool. It's a full-time job, right? It's not passive. Being the lead investor is not passive. And I always say, just make sure the deals that you get into, what is the return on your time? What is the return on your effort? Because, we tend to ignore that, right? We see the big dollar signs. It's like, hey, this looks great. Well, is it? How much stress is involved? Where's the, it's not just a return on the money, it's a return on the time and effort.
So can you give us another example? Because you said something interesting. How noisy is this investment? Like what's an example of a noisy investment?
So yeah, I'll give an example. So we were actually just looking at a flip house this past week, and we looked at the bottom line, the profits, and the noise in that is, well, I'm going to have to deal with the contractors. What if the pool equipment isn't as good as we think? There's going to be surprises. There's going to be some stress. It might not sell the first time. The buyer might back out. Like all of the risks surrounding that investment.
Yeah.
And so we compared that flip house and okay, let's say we'll make $25,000, or we could take the same money and I can go private lend it to somebody else and I could be the bank, for example. And I'm going to get less returns, but I'm not going to have to do any of the work and my stress level is going to be pretty low with almost no work. And so that's really what we're talking about when we say noise. When you say the energy, the effort, the stress, the risk, how risky is this? Because that $25,000 flip profit could turn into zero really fast with one huge surprise. Or let's say the market turns and I can't sell it and now I have to hold it for 5 more months. Well, now my $25,000 just went away because of holding costs. So that's what we mean by understanding the noise of the investment. And in the multifamily space, it's even to a bigger degree as the leaders of the investment, because we might make 10x our investment, and so the numbers look great. Oh, we made a 10x return, but how many sleepless nights did that entail? And how many stressful nights? Oh, we had a fire at this property. We had a hailstorm at this property. And so I think as you progress in your wealth building journey, you start with being the boots on the ground, taking the risk, doing the hard work, building up your capital. And eventually you'll get to a point where you got the capital and then you say, you know what? I think I'm ready to take a little less risk and just let this money work for me.
No, that makes total sense. But I can see how a lot of people would get it, be looking at the money and then not paying attention to the noise that can cause them a lot of stress down the road. So I am curious though, as far as, I mean, you've been very successful, and I'm sure people are listening and watching and saying, "Oh, they've got it all together. They've never had a day of stress in their business." But I am curious, like, what is something that you've struggled with when you started that's still kind of a struggle for you now on your entrepreneurial journey?
Okay.
Yeah, I would say that saying no to things, right? I think Emily and I we're teachers at heart. We want to be involved, and like we recently even had something come up today where had a contractor who specializes in insurance negotiations reach out and say, "Hey, I'd love to come to your property and have a look and maybe come up with some insurance negotiation items to get insurance involved on some damages and this and that." And I'm thinking, man, well, I just don't think that's going to work out, but I feel bad because he's trying to start a business and maybe there's some synergies there. And no, it's tough. Sometimes you just have to make business decisions, right? And this is all business. And our time is very precious, right? And so we continually try to prioritize things correctly. And that can be a struggle sometimes, saying no to things that just don't fit that mold.
And in business life, it also shows where it took us a long time. We worked together for probably 4 years before we decided to get a virtual assistant or somebody to help us just do some of the administrative tasks in our business. And to Adam's point, for probably a year, it was we did it all ourselves. And you take it on and you work the nights and you work the mornings and you have dinner and you open back up the laptop. And eventually you say, you know what, family life is really important to us. And even though it's going to take me time and an investment in time and energy and effort to get my virtual assistant up and running, it's going to be worth it in the long run. So now we've had a virtual assistant for 1.5 years, and we continue to say, oh my gosh, I need to give her more tasks. I need to offload things because as working couple, 3-year-old daughter, gotta got to spend time with the family. So we really encourage people to leverage others to the max potential. And it does take time and it does take effort, but it will be totally worth it.
Yeah, but the thing is, you can make the. I'll let you go ahead, Ted, in a second. You
I was
can
gonna
you can
say
make more
that's
money,
just.
but you can't make more time.
Mhm.
So, go ahead, Ted.
I was gonna say that's. I was just wondering how do you balance that? Like, do you all be like, okay, we're just gonna go to a movie tonight. We're just not gonna talk about none of this business stuff, and then you're riding by and you see a property and you're like, what do you think? No, we're not gonna even talk. How do you turn it off?
Honestly, I think for us, I think we get outside of our element as much as we can. For example, this weekend is the first weekend that we will have been at home in a month and a half. We travel a lot. And so even with our daughter, even since she was 6 weeks old, we lock and leave, and we go all over the place, and we just travel and get out and experience things, visit new places. That to me really eliminates the potential for us to just kind of get into this routine of, all right, well, I'm here at home where I live and work with you
Every day.
and let's talk about work, honey. You know.
And are you all like a band or something, like all that music stuff behind you?
I am, yeah. Mm-hmm.
Okay.
But I do think one thing that's really unique between us is that we are both on the 100% on the same page with our wealth and our financials. And so sometimes, like when we're on vacation sitting on the beach, we're talking about our $50 million net worth plan, which has been tasked to us by one of our masterminds. Like, draw out the plan so that you can get to a $50 million net worth. And it doesn't matter if it's going to take 40 years or 50 years or 30 years. And so it's a unique aspect, because what gets really exciting is you're not really talking about work, you're talking about wealth building. And we're sharing these dreams with each other of what life is going to look like when we have a $50 million net worth. And so that's a really, really unique aspect to really being on the same page with your partner on your financials and your wealth building journey, because it's just exciting conversation.
Yeah, I think that, and I think Ted brings up kind of an interesting question, because that is a challenge, and a lot of questions that I get from people I coaches that are couples that are in business. So like, what other advice do you have for? Hey, it's a couple that's just starting out in business. Based off of your experience, what advice do you have for that married couple that are also business partners?
You can go first.
Okay, and this took me a while to learn this. Don't make fun, but trust your partner. I do think, especially if you have two type A personality folks, it can be tough. It's like, hey, well, I think this. Well, we got to do it this way, because that's just kind of the way we got to do it. And no, it took me a couple years when we first got started to really, because I was in the corporate grind, right, where you competed for promotions, you competed for customers, sales. And no, the sooner that you can let go and say, you know what, my spouse or my partner is smarter than me in most instances, right? I mean, it makes things a lot more efficient, and things get done a lot quicker. And at the end of the day, it's a way better, system to work. So for me, I think the biggest thing was just letting go that, man, everything had to be like the way I saw it, because, you have a partner in life and business that probably sees things in a different light, and it could be better in some instances. So,
and my suggestion would be roles and responsibilities. So for the first year that Adam and I worked together, we really did very, very similar tasks. Like, it would be, it would just be different properties. So I would do one task for this property, but he'd do the same task for another property. And it allowed us to learn all the tasks, but then we realized we were stepping on each other's toes too much. And there was too much overlap of like, well, this is how I want to handle it. Well, this is how I want to handle it. And so after that first year, we benchmarked some other couples and really set up swim lanes roles and responsibilities, and we completely shifted our roles. And we said, okay, you're going to be the operations person, and I'm going to be the investor relations, back end, acquisitions person. And that really helped. And to Adam's point, at that point, you have to trust your partner to handle the situation. Even, you can give suggestions, but your partner is going to make the final decision on how they're going to handle their situation. And that was really empowering for both of us to be able to just have ownership of certain roles and say, this is my role. This is what I'm focusing on.
I would imagine that would be a game changer once you really iron that out.
Huge game changer. Yep.
Yeah.
It definitely, things became so efficient at that point. And to Emily's point, it's just, it is a unique thing working with your spouse, right? I mean, when you go to work, when you work at a company, you're surrounded by coworkers, right?
Mm.
And it's like, well, you're judging how everybody does their job. They're judging you. It's kind of like, hey, how do I fit in this world? But with your spouse, it's obviously more delicate. And so you have to really fine tune the way things are going to work so that you can, work in business and life. So
You two seem like you really got this thing going, right? Because you got matching shirts on. Yeah. So it just seems like answer that one. Like it just seems like it's a really good partnership.
Yeah.
And it's so interesting because we do these shows, and it's a lot of times it's a challenge when you have two people. It's a challenge of who's going to answer this, who's going to answer that. Sometimes there's lulls. If you've noticed, there hasn't been one lull. It's just been like bam, bam, bam.
Yeah. And even telling our story and talking about some of the pivots we've made in investing in business helps us reflect and learn and even come up with ideas. Like after the show, we'll be like, oh man, what about this idea? So it's just it's great to kind of be on the same page and be able to talk about it.
Yeah, I think this part of the show is going to help a lot of people. I think certainly the wealth and having that right mindset is critical, but definitely the being married and being in business piece, because I know firsthand from the people I've coached that this is huge. And so thank you for sharing this part of the show as well, as far as what you're doing to make it work. And thank you for being the example that you can have massive success as a couple.
Yeah,
this is fantastic. So let's we're at the final segment. It's called Write This Down. And this is, by the way, this is Ted's favorite part of the show. It's called Write This Down.
Really
and this is
really.
this is where we each go around and we give at least one takeaway from today's episode that we feel like the people need to write down so they can level up. So Adam and Emily, we'll start with you. You're the guest of honor. What do the people need to write down?
Well, I honestly think the biggest thing that's impacted us and people need to really take advantage of is the education component. So that the quote that we said earlier, the formal education can
get you a job,
but
specialized education
can make you a fortune. Yeah, I think that's a big one because it's very, it goes against the societal grain, right? To go to a weekend real estate event and join a program for $10,000 to learn how to flip houses or what, none of us were raised that way, right? It's just, that's not what people do. But then again, we went to two very, I would say high level engineering schools in the Big Ten, and spent a lot of our parents' money, getting educated. And we don't even do that anymore. So it just puts it into perspective, right? I think you do have to at least be open-minded when it comes to the education part of it.
And for me, one of my favorite phrases from one of our mentoring groups is take massive action. And we actually didn't even come across that mentoring group till about 8 years into our investing career. But looking back, that's exactly what had to happen when GE sold off the businesses we were in. We had to take massive action. We moved, we started a new business, got educated, got the real estate license, and then bought our first property. And then it gets easier after that. When we pivoted from single family to multifamily. That was another example of taking massive action. And I think you have to realize that in order to make a big impact in your wealth building career, it sometimes takes big pivots, and they're scary, but they are going to pay out, and they are going to allow you to build confidence and build your wealth for you and your family.
Take massive action. That's fantastic. Write that down. All right, Ted.
Take massive action. Like she said it all there, right? I just, I think, just been so much great information that's been shared. I guess, the biggest thing I think is, well, for me, I think one of the things is the whole thing around trusting. And to establish those swim lanes, as you stated. I mean, those are key, I guess, in any type of partnership. And I could definitely see how that could be in a spousal type of partnership, even more so. So yeah, that trust is really key.
100%.
Absolutely. Yep. Yeah, that was big for me too. Just kind of divvying out the roles and responsibilities, and everybody's in their lane and doing what they do. So thanks for sharing that one, Ted. Hopefully everybody wrote that down.
That means you can't use that one.
Okay.
That means you're like, that's what I had listed here. And,
Yeah. Copyright.
That's the good thing about going first. That's the good thing. Yeah.
You saw what I was trying to do there, Ted.
I saw you was kind of repeating. Yeah. That's really a good one right there, Ted. Thanks.
But no, so mine for this segment, to write this down, has to do with being willing to invest in your success. And I just think that's a stumbling block for just a lot of people that I've come across. They aren't really willing to. And I saw a stat here recently that may change that for some people. It said that like 80% of your thoughts are repetitive thoughts. In other words, 80% of the typical person's thoughts, the same thoughts that you always think. So if you don't have that education coming in, you're just thinking the same things, right? You're just thinking, get up, go to work, come back, get up, cook dinner, go to work, get up. You've got to have that additional education to really help you to move to that next level. So, I mean, it's critical to invest in your success. I mean, everybody I know that's at an elite level in anything, I mean, they spend a crazy amount in masterminds, coaching, mentorships, going to conferences, and there's a reason for that. So thank you for inspiring everybody to make that shift. But that's my thing for write this down. You have to invest in your success.
That's a remarkable stat. 80%. Wow. Makes you think about. That's crazy.
Yeah, most people are just walking around on autopilot. It's just the same old.
Mm-hmm.
That's why you have to really look at, who you're hanging around, what information are you putting in your brain, and that's all going to help you to get to that next level. So and for me, it's like sometimes it's just one idea, right? Sometimes you get that one thing and it changes, how you're going about things, and you start to see different results. So
yeah.
All right. Well, good stuff. Okay, so Adam and Emily, everybody's like chomping at the bit now. So what's the best way for our people to follow you?
Our website is the best way to reach out to us, and it's www.ae, like Adam and Emily, aeinvest.net.
All right. aeinvest.net. Good stuff. Well, thank you. Thank you for sharing everything that you shared. I mean, this has been a fantastic episode of the 30-minute hour. And speaking of sharing, don't forget to share the show.
Share the show.
Oh, yeah.
Share the show.
That's right. People need their mindset shifted. So definitely make sure you don't keep this episode a secret. Don't keep it to yourself. Make sure you share the show. Don't forget you can reach us on Apple Podcasts and Spotify and all those other podcasting platforms. Don't forget to hit the subscribe or follow button so that way you never miss an episode. So that concludes this week's episode of the 30 Minute Hour podcast. Until next time, have a great one.